Thanks for joining me this Friday, the 28th of March. I'm Grady Wolf, market analyst with Bell Direct, and this is our weekly market update. Trump tariffs are the revolving theme driving market sentiment over the last month, and the roller coaster of Trump tariffs took off yet again this week as the president announced further taxes and pardons ahead of the April 2 reciprocal tariff deadline. Let's break down the tariffs announced so far, what is expected on April the 2nd, and how these tariffs impact you as an investor. Yesterday, Trump announced a 25% tariff on all cars and parts that are not built in the US or produced in the US. While this looks positive in terms of favouring US brands in the US market for sales, it actually hurts not only US automakers but the end consumer too. Almost all automakers in the US currently source parts and elements of their respective supply chains overseas, which will mean the new tariff impacts these automakers too, as they will be taxed for any parts made offshore. The intention of Trump tariffs on non-US made cars is to prompt automakers to move the car factories back to the US. Unfortunately for consumers like you and I though, any company in the US or overseas that is selling a car into the US market will be tariffed the 25%. And as such, we will see the prices of cars increased as the companies impacted pass on the tariffs to the end user, as opposed to wearing it themselves, which makes sense financially. Global automaker stocks fell after the tariff news was announced this week, unsurprisingly. Copper prices hit a fresh record high of $5.37 per pound on Wednesday, amid investor concerns over Trump's intentions to impose a tariff on copper imports in the coming weeks. Copper prices have soared 31% this year, driven primarily by US buyers trying to stockpile the commodity before potential tariff impositions. Copper prices have outperformed the gold run, which we're all talking about right now, and stock market returns year to date with a rise of 31% since the start of the year. The rise of copper demand has been driven by the key role of copper in the green energy and electrification transition and current outlook for undersupply of high-grade copper for many years to come. Since tariff threats began on copper, exports of copper scrap have declined from the US, and copper scrap accounts for around a third of global copper production. The reasons behind Trump's copper tariff include China being the world's largest importer of the critical mineral, embarking on a stimulus and recovery journey which will see an increase in the region's demand for copper. Low supplies and increasing global demand for the commodity are also driving the price right now, of which the US is the fifth largest producer of copper and holds about 8 to 10% of the world's unmined copper reserves, and also the growing need and increasing diversification and diversified use of copper in AI, technology, and so many other industries. With the electrification movement ramping up, we expect Trump's copper tariff to be announced over the coming weeks. Just watch this space. And of course, the April 2 deadline looms for Trump's reciprocal tariff threats. April 2, according to the US president, is known as Liberation Day, whereby taxes on imports of goods into the US from other countries that the US either consistently has a trade deficit with or those that have tariffs on US goods are in the firing line for new tariffs to be implemented on goods from such countries coming into the US. However, in recent days, President Trump has said April 2 may see some more lenience than reciprocation. But with this guy, there is no guarantee of anything, as we know volatility is very high. So who knows what will come out on April the 2nd? Again, it is just a watch and wait situation. US consumer and business confidence has naturally taken a battering amid the tariff and market volatility with so much unknown, and the companies are unable to forecast, hire, spend, or even predict what's going to unfold over the coming months. So what does this mean for you and your investment decisions? Any exposure to US equities in the automaking space will likely face volatility over the coming weeks as markets react to the new auto tariff. Exposure to copper miners locally or in the US may have varying movements, but copper is a commodity in high demand, thus driving tailwinds for the sector for a little while to come. Gold has been on a run as investors flock to the safe haven nature of the precious commodity. And finally, just keep calm and remember to follow your investment strategy. Reactive selling, news and noise all causes stress in the market, and over a 10-year period we have seen that when markets tumble due to events like COVID, the GFC or even Trump, they also rebound afterwards and rise higher over the following years. Locally, from Monday to Thursday, the ASX 200 posted a near 0.5% gain as a strong rally among the big banks offset weak broadness among other sectors like tech, real estate, healthcare, staples and materials stocks. The winning stocks this week were led by Gold Road Resources, soaring 23% on a received and rejected takeover offer, while Mineral Resources jumped 8.8% and Helios gained 8.61%. On the losing end, Helia Group fell 18.56%, while Clarity Pharmaceuticals tumbled 18.35%. On the broader market index, the All Ords rose 0.33% this week as AMA Group rocketed 25%, while FBR tanked 41.18%. The most traded stocks by Bell Direct clients this week were Macquarie and Larvotto Resources. Clients also bought into James Hardie Industries, NAB, Westpac, ANZ and Woolworths, while taking profits from Mineral Resources, CBA and BHP. And the most traded ETFs by our clients this week were led by Vanguard Australian Shares Index ETF, Vanguard US Total Market Shares Index AUD ETF, and iShares S&P 500 AUD ETF. On the economic calendar front next week, we may see investors react to the RBA's latest rate decision, where it is widely expected Australia's central bank will maintain the current cash rate at 4.1% to ensure inflationary drivers remain under control, and also due to uncertainty over global growth due to those Trump tariffs, as I mentioned earlier. Overseas, we may see investors react to China's manufacturing PMI out on Monday, with the forecast of a slight uptick in output, and US jobs data out later in the week, where it is expected the unemployment rate will remain steady, but less jobs are anticipated to have been added to the US economy in March. And that's all for this Friday. I hope you have a wonderful weekend, and as always, happy investing.